Well, we have made it to mid May, and one of the easiest real estate questions is, should I rent or should I buy? Well, in Austin right now, it is far cheaper to rent than buy a house. How much so? Let me show you. Well, this article came out this week in the Austin American Statesman, and it points out that homeownership in Austin now costs 117% more than renting. And we have one of the widest gaps in the U.S. For those that know this area, San Antonio is about an hour, hour and a half south of us. But they're only about 25% more expensive to own than rent. So that shows you how much more dramatic our gap is than even San Antonio to the south. I'll share that with you in numbers. What does that mean exactly? So let's talk about San Antonio. So let's say if you have a mortgage payment with property taxes right now, their median home's about 1698. Call it 1700 bucks to buy a house with your tax bill in San Antonio. You could rent for about 1361. So again, might cost you 250, 300 more bucks a month to buy a house than rent a house in San Antonio for the same average house. In Austin, we are in the top four in terms of a gap between buying and renting. In Austin, you might be able to rent for $1,531 a month, but a similar house is going to cost you $3,300 plus a month. So San Antonio, maybe only $250 or $300 difference. In Austin, you're looking at almost $1,800 difference to have a similar house. So much more expensive to buy and rent. The housing markets are a little different. This is a good article. If you want to see it, I'll throw it in the links below. Well, if you're going to rent in our area, where are we seeing the cheaper rents to get a property? This chart's looking at the one bedrooms. So the lighter colors are going to be the less expensive places to rent, and the size of the circle is really just population. But obviously, the most expensive is going to be in the metro. You're looking at Austin, Westlake, Dripping, probably parts of Round Rock, Pflugerville. As you get up into kind of farther northern suburbs, it'll get a little cheaper. It's cheaper, however, if you can go down to Kyle. Definitely cheaper there, Lockhart, and of course, working your way to San Antonio, as we just talked about. So right now, the closer you are, of course, into the Austin metro, it's going to be more expensive to rent. When we look nationally, I'll skip those charts there. This is just looking at what's happened over the last year. So the U.S. has actually seen rents cool a little bit, a little more than 1% off last year, but Austin continues to decline on rents. We're down 5.6%. Now, a lot of this is apartments. But still, if you are renting properties in Austin right now, even if you're duplex or single family, you're feeling it because it has just taken a little longer to get tenants. And typically, you can't raise your rents right now. You're kind of keeping rents flat. So that's what we're seeing in the market. Obviously, we're in a position where the rental market continues to soften. And when it's soft and it's expensive to buy over your rents, think about that from a buyer's point of view. It's just cooling off a lot of buyers that say, hey, maybe I'll wait. I'm getting a good deal on this rent. Let me wait until I feel some pressure there. Maybe housing continues to fall and I'll get a better deal next year. So that's been the cycle, or at least mentality, the past 3 or 4 years. We are starting to see a change. And let me show that to you in the next couple charts. So this is looking at the sales market. And again, I showed this information to you last week, but it refreshes a little bit. So let me show it to you now. So right now, inventory, we're still leaning a buyer's market. I'm a believer that 4 months of inventory is really what feels balanced to most people. Once we start tilting to 5, 6, and beyond, it's going to start feeling more like a buyer's market. We have over 18,000 properties for sale right now, and about 3,400 were pending in April. So again, less than 20% of those are going pending. The upside of the market right now, and this is where we're starting to see a change, is if we look at supply, that's these darker orange. Again, we're kind of neck and neck with last year, but we're not, exponentially growing year over year on supply like we did the last several years. So I think we might be kind of topping out on supply. The upside is on the demand side. So if we look over on the demand side, the dark orange bars are noticeably above where last year's demand was. And now the last couple months, we've been in line or above the 10-year average on demand. So we've got buyer activity. The reason you may not feel it is supply. We've got to work through that inventory of supply. But not all areas are equal. And you will be hearing this in the market. So let's look at maybe a warmer part of the market. So this is Southwest Austin. This zip code is 78749. It's about 10 to 20 minutes southwest of downtown. Look at their inventory. If you're a seller there, you're doing okay. There's not a lot to buy. Now, you could be mispriced, but if you are priced well, you could sell fairly quickly. There's not a lot of inventory down there. There's 113 properties for sale, 41 are pending. And so you've got, 2 to 3 months of inventory. If I look at supply, it is noticeably below last year. So supply is starting to tighten in Southwest Austin. And again, if I look over on the right, the demand is significantly above last year. Lower supply, higher demand. That market is coming back into balance. The opposite of that would be downtown condos. So if we look at downtown, which is almost all condominiums, I mean, you've got probably over 11 months. You probably got, over a year of supply downtown. There's almost 300 condos for sale right now. 18 are pending. So you've got 4%, roughly, maybe even less than that, are getting contracts right now. Supply is still pretty neck and neck with last year. And demand looks okay. But again, demand off what? And it's just the supply and demand imbalance is just huge. So it really depends where you are. If you're in a good location, not a lot of new construction, you're in a desirable area with schools and homes, we're seeing those areas pick up pretty well. If you are still battling an oversupply of construction, or you're just in maybe a type of product that buyers don't want to buy right now, living downtown, maybe in a condo after COVID, there's kind of some second thoughts there. Maybe the office market downtown, is slow. And so therefore people aren't living downtown to work downtown. That's where we're feeling this kind of separation between those markets. All right, let's look at price. This is historic sales price trend for the past 4 years. The far left-hand side was the top peak of COVID. And each one of these gray lines is a new year. Okay, so as we came out, you can see we had a huge price drop after the interest rates went up in 2022. And then in the spring, we saw prices go up. And then what happens? The prices come back down in the fall, and they end up lower than where they started the year. And that's when you feel the price decelerate. But we got to 2024, and again, we had a little spring bounce. And then again, you spend the rest of the year with the price decelerating. Last year, we saw the price go up again in the spring. And again, look how volatile it was last year, though. I mean, it was really kind of bouncing around on price, but at the end of the day, it came back down. Well, here we are, spring 2026. And again, we're seeing that incline. So, hey, if history is our guide, we should be peaking right now on price. Somewhere in this May, early June window is where we're kind of done with those kind of spring pops in price. The real question is going to be, what does the second half of the year look like? Unless something changes, I expect the second half of the year is going to feel slower. We're going to feel the prices continue to soften. The question is, at the end of the year, because every year the price goes up in the spring, are we going to end up lower than where we started at the beginning of 2026? I think the jury is out on that one. We'll see if some of this increase in demand will help kind of shore up or at least stabilize us on the long-term price. Finally, let's talk about mortgage rates. So, since we've had the war going on and oil prices going up, and of course that increases government debt. Anytime you have a war, you're spending a lot of money. And so what happens is it creates a lot of push in the bond market. And we've had, the rates elevate a little bit. The good news is these are still noticeably below where we were this time last year. We were up in the 6.8s at this time last year. We're now like 6.4. If you're VA, FHA, or really good credit, you're at least low 6s, if not high 5s. So I don't think it's a rate story anymore. Obviously, it's going to have some impact on the buyers. But I think as long as we can stay maybe at or below 6.5, I think the rate story is starting to fade away. And now it's really just pure supply and demand. What is going to drive buyers to want to buy in the market? If you are a seller right now, again, lots of inventory. So really your competition continues to be the other sellers in the market. The key is to do the right things, to put your house in the best position so that a buyer chooses you over the other inventory in the market. You can't just throw it on the market and hope it's going to sell. It's got to be painted. It's going to need the fresh flooring. If you have old carpet, it's going to need repairs done. Take those steps. Our job is to walk you through it so that you can put your best foot forward. If you're a buyer right now, just know that this inventory is peaking right now as well. We're going to have maybe through early July is where you're going to see the most amount of properties for sale, and then they'll start to drop off as we get into the fall. Still will be plenty to look at, but just know if you want to find the most on the market, now the next couple months is the best time to do that. Anyways, you can follow these videos each and every week on our YouTube channel. Go to Ryan Kelly Group, click that subscribe button. And of course, if you know anybody looking to buy, sell, invest, or finance here in Austin, we'd love the opportunity to chat with you. Well, we had a really big rainstorm overnight. This was over the weekend, and kind of cooled temperatures off, but I think we'll be back up into the 90s this week. Definitely starting to feel like summer. We'll bring you another update next Monday. Talk to you then.